Now we will talk about price chart patterns and how they can be used to predict the direction of the market. As research has shown that patterns tend to repeat themselves, identifying them and predicting the market can result in huge profits. Now, let's look at the double top and double bottom patterns. You can look at your price charts and identify these M and W shaped patterns. In a double top or M-shaped pattern, prices are already rising and they touch the first top, come back down on the neckline and then touch the second top, after which it falls back down to the neckline again at this point, as it's most probable that it will go in a downward trend, so we go short. The double bottom is just the opposite of the double top. Here the prices are already falling and they hit the first bottom, after which they rise to the neckline and they fall back down and hit the second bottom. From here they rise and touch the neckline again. At this point we go long in the hope that the market will follow the pattern and keep on rising in a uptrend. When you see two small tops that look like shoulders and a larger top in the middle that looks like a head, you should know that it's a head and shoulders pattern. Here the price is already rising. They touch the first top, move back down to the neckline, then touch the second and move back down to the neckline again. And finally, after touching the third top, they fall down for the third time, and at this point we go short, as the pattern predicts the market moving in a downward trend. The inverse head and shoulders, as the name suggests, is the opposite. Prices are already falling and they hit the first bottom, rise back to the neckline, fall back down to the second larger bottom, and then rise back to the neckline again, fall for the third time to the third bottom, and finally rise back to the point where we go long in the anticipation that there will be an uptrend. Before discussing pennants and wedges, we will look at the difference between their shapes. As you can see, all the shapes are similar to each other, but if we observe closely, they all represent different patterns. Let's look at the bullish and bearish pennants. Both have a flat, narrow shape, unlike downward rising and falling wedges, which have a narrow shape but they are not flat. One of them points up and the other one points down. The same way, upward rising and falling wedges also have narrow shapes pointing up or down. The main difference between downward and upward wedges are that the first two have prices falling in the start and the second two have prices rising in the start. So pennants are narrow shaped but are pointing to the front. Downward rising and falling wedges are pointing up or down and the prices are falling in the start. Upward rising and falling wedges are pointing up or down but the prices are rising in the start. Now let's talk about these pennant shaped patterns. A pennant or flag shape that you see here is different than wedges, as pennants are flat in shape as opposed to wedges which are pointing upwards or downwards. In a bullish pennant, prices are rising in the start, after which they fluctuate narrowly. We expect the market to rise and trend upwards, so we go long. On the other hand, in a bearish pennant, the prices are falling in the start, after which they fluctuate narrowly. The previous trend continues and the prices tend to fall downwards and we go short from here. So the only difference between these two patterns is that in the first one the prices are rising in the start and in the second one the prices are falling initially. Now we come to two price patterns that have a wedge-like shape, and that's why they are referred to as wedges. In the downward rising wedge, the prices are moving downwards or falling, but the wedge is pointed upwards or is in a narrow ascent, which tells us according to our pattern the prices are going to go in a downtrend, so we go short. The second pattern is shaped as a downward falling wedge. It is pointed downwards as opposed to our previous pattern which is pointed upwards. Here the prices are falling as in the previous case, but they are in a narrow descent. Our pattern tells us that at some point the trend will reverse and prices will rise in an uptrend. So we go long. In both the shapes, one wedge points upwards and the other points downwards. In both cases, the prices are falling in the start. But later on, in one of them, prices continue their trend, and in the other one, the prices reverse their trend. In our previous part, we discussed wedges which had falling prices in the start. That's why they were called downward wedges. Here we will discuss wedges that have prices rising in the start, so they are called upward wedges. In the first upward rising wedge pattern, the prices are already rising upwards, and then there is a narrow ascent in the price pattern, after which we are supposed to go short as the trend will reverse downwards and the prices will fall. In the second upward falling wedge pattern, the wedge points downwards as opposed to upwards. In the start, the prices are rising. Then there is a narrow descent, as you can see here as well, in the price action, after which we go long, in the hope that the prices will continue in an uptrend. So in both cases, prices are rising in the start of the pattern, after which they go into a narrow ascent or descent. In the first case, the trend reverses and prices fall. In the other case, the trend continues and the prices keep on rising. This price pattern you see is the cup and handle. As the name suggests, it's shaped as a cup and a handle. In the start, prices are rising, after which they go in a parabolic curve or U shape. Later on, they form a narrow descent in a downward position. At this point, we go long in the anticipation that the market will rise in an uptrend. In the second price pattern called a rounding bottom, we start with the prices falling, after which they form a parabolic curve or U shape and continue to rise from there. At this point, we go long in the anticipation that the market will trend upwards.